Yo, what is up, guys? It is Charles here with TreasuryEdge. I want to thank our team that's coming on today from FGNX. I'm super excited to talk to you guys. I think a lot of times, creators in the ecosystem will talk with creator to creator, and the focus on TreasuryEdge is how can we bring you the companies that are actually building inside of the industry, because the expertise as a creator is going to be the expertise difference in comparison to people that are actually in the industry. And so I'm super excited to have Maja and Joe from the FGNX team. And I'm honored to host them, and I'm honored to bring them to you guys for the conversation. And I want to go around Maja and Joe. If you guys can do Maja first and then Joe, just some backgrounds. How did you guys get into FGNX? What's your background coming into the business? What were you doing prior? And then we can go into what your guys' strategy is, what underlying assets you're going to hold, and then maybe some of these implementations, as we've seen kind of a changing of guard in these companies, and digital asset treasuries is kind of a new name. I mean, the past 2 years, MSTR kind of pioneered this thing and started it. And so, Maja, I'll give you the floor if you want to give your background.
Yeah, thank you for having me, Charles, and good to be here, and especially good to be on with Joe. This is absolutely amazing because obviously, as Joe will go into his background, is a legend in TradFi space, and so this is pretty exciting for me, at least. I got into crypto in 2010 while I was working in mobile payments in Africa and Latin America, and Bitcoin white paper and its peer-to-peer concept really clicked with me. And then 2013, I acquired the first bank for Tether, which is a very large company these days, and then piloted first Ethereum smart contracts at GE with JP Morgan. So we launched the first blockchain, the trade finance deal on a blockchain. And so that's how I got into crypto. And then with FG Nexus, most recently is because my business partner has also backed MetaPlanet, and I've known them for 15 years. We've been kind of looking at how we do something similar here in the US. And then we met with Kyle during that time, and this is how we constructed a nexus of FG Nexus, which is a nexus of TradFi and crypto backgrounds. So that's how I got into FG Nexus.
Okay, wow.
Well, I think from my end, Charles, certainly I'm excited to be on as well. And Maja oftentimes winds up doing interviews on her own, as I do, but we don't get a chance to spend our time together. So I appreciate the opportunity to be able to do that. And I think my background is I've had overlapping careers, and I've actually been in the traditional finance world for about 40 years. The last couple of years, very much getting involved with what we're trying to do with DeFi and what the Web3 world is going to look like. That's been part of Fundamental Global LLC. Kyle Sermonera, that Maja referenced, and I are co-founders, and I'm the chairman, and he's the CEO of Fundamental Global LLC. And we've been partners and together on that for the last 13 or 14 years. Before I began my career at Merrill Lynch. Before I did that, I was a college football coach for 16 years. Then I went to Merrill Lynch. Then I became the CEO of Ameritrade. I stepped down in 2009. We had a 500% return, which includes the financial crisis. And we actually outperformed every financial firm in the world. That includes Goldman Sachs, Berkshire Hathaway, JP Morgan, et cetera. And we're very, very proud of that. And but the reason why I stepped down was maybe there's something else I might want to be able to do with my life. Although I was still chairman, I became chairman of Ameritrade. And then I got a call from a group of alumni at Yale talking to me about the possibility of coming back to football. And at a time when I probably could have done anything I wanted in my career, I decided I wanted to go back. So I spent 2 years at the University of Nebraska, 1 year at the United Football League, and then I went back and became the head football coach of Coast Carolina. I am honored in my time as head coach to have been National Coach of the Year a couple of times, and very, very proud of my career there. The whole time I've been coaching football, I was the chairman of Ameritrade. So over the span of the last year or two, as we've looked at the digital world and what's going on, and conversations that Kyle and I had strategically, we thought, for me especially, Kyle also, but for me, it's only and always about the people. And I think you need to have a vision. You need to be able to execute a vision. But if you don't have the right people in place, you're never going to be able to maximize your potential. And then as Kyle and Maja had gotten to know each other, and we talked about doing something together like this, that's how FG Nexus became FG Nexus, and how Maja and I on our respective teams actually came together.
Wow. Yeah, that's awesome backgrounds, guys. I think, kind of maybe if we can, before we go into underlying assets, what you guys are holding, maybe if you can give a little bit of the beginning of what, because MSTR, something that's interesting is, they pivoted from a software company, and they were down to like $2 a stock. And on that pivot, now they're $300 or whatever it's at, $350. And then we saw an absolute boom. What was FG Nexus's or Fundamental Global's middle point before you guys transitioned into a digital asset treasury? And, if you and Kyle had co-founded that together, what was the company before in that MSTR software stage? And then kind of going out of that, Maja, if you can talk about what you guys have shifted into with your underlying asset and the digital asset treasury, I think that would be good for some background on the company.
So we really began just as a hedge fund, and we looked at different opportunities we had. And Kyle and I talked a while back about there is a whole slew of companies out there that have reasonable balance sheets at about $250 million in size that investment bankers don't really want to spend time with. So we got involved with the activist group. Now remember, I said I was either running Ameritrade or chairman of Ameritrade while I'm coaching football. Football's an 80 hours.
Crazy.
7 days a week. There's no days off for 5 months. So Kyle's really running at Fundamental Global.
Yep.
And then from there, we really talked about some of the things that, as going forward, we need to be able to do things that we think have great opportunities, but it's got to be with people we want to be with, and it's got to be something that, frankly, we can have fun doing. And then Kyle was part of a group that we got involved with FG Communities, which is a mobile home operation that we really spent a lot of time on. And then when we look at but that's all traditional finance. And when we look at the world and what's happening and what's taking place, and just with tokenization and stablecoin and blockchain and AI, all these different things happening today, and what the world's going to look like in the future, we really felt we had to be part of that. So that's how we kind of took our traditional finance background and we started to morph that, take a piece of that, start to morph that into what we believe the digital world's going to look like. And enters Maja Vujinovic.
Honestly, this is a perfect blend though, because a lot of times you'll see companies that have just a crypto lean, and if they're not really good with traditional markets, their ability for debt, their ability to really accumulate the asset in a speed that becomes accretive to the ecosystem is really, really hard because they're just crypto people. And that's not necessarily a knock, but the problem is being able to run into the traditional markets and understanding the world, those conversations, and then using that in a creative way is such a value. So it seems like you guys have a bit of a superpower between all the team members. I'd love to, shifting out of that phase and then going into when you guys did a digital asset treasury. Maja, can you talk about that shift and maybe when you had met the team and that move over of what underlying asset you guys decided to choose and why you made that choice?
Yeah, I think one thing I do want to address, I
Please.
think it goes both ways. I think it's really interesting what Joe said, and I think it's one of our differentiators. You're absolutely right, Charles. If you look at the stats of these DATs, most of them are either crypto bros, right? Or they're TradFi guys, and they're not really successful, right? The ones that really are a mix, let's just BMNR, is a mix of two. Jonathan, who is original founder of the company, has been in crypto for the last 12 years plus, right? And then
a good point.
Right, Tom Lee. And so I think it's very interesting. Most people don't look under the hood. They just kind of look at the MNAV and, is Solana versus Ethereum, some kind of noise. But reality is, to build a really great company, it takes, I think in today's world, particularly in digital assets or digital intelligence, it requires it requires a mindset that is extremely different from each other. Because here's the thing, the traditional finance, as Joe Moglia knew it is going away, right? Things are going on chain. Things are going to be, you saw the announcement this morning of Polymarket and ICE. ICE just invested $2 billion.
I saw that. That was insane. That was crazy.
But not only that, what I saw this morning on CNBC is the third bullet point under there when they said they're going to partner in tokenization. I thought, wait, hold on a second. Wait a second. What do you mean by they're going to partner in tokenization, right? So if you think about where they're at now, you tend to ask a question like, why do they need all this money? They actually don't need all this money. But here is the thing. The world we're going into is a world of kind of what we're living today, which is attention economy. The bigger, the better, right? You're preparing for the future. You're kind of betting on on-chain activity, and that's trillions of dollars of on-chain activity. So the world as it is in traditional finance is very much being disrupted. This is not a if anymore. It is it. Right? We are living it. And so you have to then combine that with people that understand that deeply, such as Joe and Kyle, right? And then you cannot do without the other side, people who really understand the intricacies of why actually I saw tokenization in 2015. Joe and Kyle didn't see that tokenization in 2015, right? It was people like me and early adopters in crypto and Carlos at Securitize, right? And Galaxy founders, right? It was people who were early in that day, and they thought, wait a second, I understand this technology intimately, and I know exactly how it will disrupt the Wall Street, and it's just a matter of time. Having those two minds come together to see where the possibility is to take the vehicle like this to the next level, I think it's prudent. It's not anymore a choice to say, I can launch a DAT and just be, chasing an MNAV. Impossible. If you think you're a successful crypto bro and you did that, or you think you're going to do that, it's only a matter of time that you're going to go right? Because the world is expanding, right, in such a massive ways. And so I think going back to what we've done at FG Nexus and why we saw Ethereum is, one, because Ethereum is undeniably the choice of Wall Street. We can have opinions. I'm an investor in a lot of L1s. We can have opinions of why certain things are better and than others. But reality is that Wall Street has chosen Ethereum. 65 to 75% of stablecoins are in Ethereum. 54% of tokenized assets are in Ethereum. That is not going away. We're going to be in a multi-chain world, but on-chain activity right now, to me, is quite clear.
Yeah, wow. And that's why the focus for you guys has become ETH?
Yes. And also because, again, I understand ETH really well, launched the first trade finance deal right in the world between JP Morgan, GE, and Ethereum. I brought Joe Lubin really early on to GE. I have a huge admiration for what Joe Lubin has done through Consensus and has been able to teach people around Ethereum. And again, I'm an investor in a lot of these assets, but I actually think that there's a play, and because of that multi-chain world, a lot of those L1s have chosen their vertical, right? Have chosen what they focus on. And I think we're going to have, as you've seen, Google launched their L1, Stripe launched their blockchain, right?
I know, it's crazy tempo.
Yeah, a lot of people are going to launch their blockchains, right? And that's why we're going to have many chains. So
I think one of the other reasons too that I think is an advantage for us, Charles, is that when you look at the future, right? Stablecoins hardly existed a few years ago. $300 billion market today, $2 trillion market 2 years from now. We know that the world's certainly going to change, and Wall Street's not going to look the way it looks today. It's not going to look that way 2, 3, 4, 5 years from now. And when you look at tokenization and when you look at stablecoin, Ethereum is about 60% of that market. So as it gets bigger and bigger and bigger and bigger and bigger, and we're able to leverage that, that's part of the reason why also Maja and the team really believe that Ethereum was the right way to go. That made sense to me.
Yeah, and Charles, one thing that I actually just did, what Joe said inspired me to think about. Let's double click on that. If you're native crypto and you're listening to this right now, you can put arguments out there. Here's why Solana is better. Here's why XRP is better. Here's why, right? There are many arguments out there really native to crypto. And you and I could probably have a different show of why, certain things are better in Solana or another L1, or why certain things are better in Ethereum and etc. But here's the thing. A lot of times best tech doesn't win. But what is best? What is best, right? Best could be just massive distribution. Best could be largest access. Best, right? It doesn't have to be necessarily code best, right? So I would encourage people to start, zooming out a little bit and say, where are actually institutions trusting something? And reality is that Ethereum has been extremely resilient, no matter what people want to say, and that institutions won't trust, right? You can't. I remember when I was at GE and I would present blockchains, right? First thing that I had head of aviation tell me is say, you want me to put things on a chain that hasn't been tested for over a long period of time? do you know that I would have planes falling out of the sky? Like we need time to test this technology. We need time to put things in place. Joey's smiling for a reason. I'm sure he has comments.
Well, I can think of, first of all, I thought chain was something that, you wrapped around a building so it wouldn't fall apart, number one. Number two, I can imagine just the idea. Can you imagine not testing these? You get planes falling out of the sky. So I think history does prove the ability for a marketplace to be able to trust and believe in a certain thing. In this case, we're talking about Ethereum, and that's one of Ethereum's advantages versus the others. And I think Maya's already made the point. We know Ethereum's not the only thing going on in the world as we go forward. There are things going on as well. But this is where we believe we have the greatest opportunity to be able to provide incremental value.
Yeah, this is a good point too. And like Tom Lee has talked about this a few times, that Ethereum's never went down, but like Solana's went down many times. So I didn't think about it from a traditional market standpoint. Safety around whatever asset you're going to put on that blockchain is paramount, because a lot of times in crypto, it's speed of innovation. Like people are moving from chain to chain over and over and over, but I think that they're breaking stuff along the way. But traditional markets, if you're going to put $2 trillion on chain and stable coins, doing something that's going to be new or slightly better technology actually might not be the play for them. And they're looking for safety in comparison to something that's necessarily cutting edge. Does that feel like that way for you guys?
Yeah, absolutely. Certainly for me, I mean, any executive, and I was part of the executive team at GE, right? You're not just responsible for yourself. Sure, on my own assets on Ethereum, I can do all kinds of backflips, right? And get 10% a yield, right? But on investors' money or on customers, right? On liabilities where I have a fiduciary duty, you can't do that. You need trust, you need security, you need reliability, you need resilience.
I think it's the safety. I don't care what the market is. Safety is proven over a period of time. It doesn't exist on day one. And you go back to the idea of TradFi, and people in that world, while we make believe, we think we kind of understand. We know things are changing. We absolutely know that. But we don't necessarily understand the intricacies behind what that world is going to be like. So to be able to take all of our money and be able to put it in a certain spot, that's okay, as long as we know it's going to be there. If we made a mistake, it may not be as much, but it's going to be there. And the traditional finance world has not gotten there yet, but it will. It will. It'll have no choice but to get there.
Yeah.
Wow. Very good, guys. Yeah, I think, wrapping up, a question for Maja. Right now, what's your guys' overarching strategy around accumulating ETH? And then how much have you guys accumulated so far? Where's the company at right now?
Yeah, so number one, we've raised 200 million 2 months ago, and then we bought ETH immediately. And so we've also taken that Ethereum and then we've staked it, right? Because it's another reason why we chose Ethereum. It's a productive asset. Unlike Bitcoin, you can stake, restake, do liquid staking, do DeFi, right? And that's actually, interestingly, I'm going to be writing about that. I think the yield strategies for a lot of corporate treasuries are going to become really important. Not digital asset treasuries, I mean corporates, like real world, right? Companies and TradFi. So I think that's another reason why we chose it. And so we're already staking all of our Ethereum. And now, look, most people will ask us, hey, what do you do in a bear market, right? Does it all depend on this price? Yes, the higher the Ethereum price, right, the better we do, sure. However, though, our ETH accumulation is structured for long term. Right. So it's similar to MicroStrategy, the way MicroStrategy approached Bitcoin, but with added staking, as I said, restaking and yield components. And that kind of gives us a base layer for programmable income. So it's not just a speculative bet. So that's number one. Number two, in terms of your question, in terms of strategy, is we are heavily looking at tokenized, capital market infrastructure. So starting with our own NASDAQ listed shares, right, that we launched the other day with Securitize. This works in a bull market and it works in a bear market. So it's issuance, settlement, distribution. None of those really stop on downturns. In fact, infrastructure adoption often accelerates when speculation cools off. And so I think that's another thing that we are starting to look at as a potential long-term strategy. And then third, we are kind of looking at diversification of operating cash flows in the future and kind of looking through what partnerships can we do, custody and tokenization services, on-chain income rails, stable coins potentially, right? Because remember, the vehicle we have right now is exceptionally powerful. We have had a number of other crypto companies who've come our way saying, hey, look, we want to go public, right? And those businesses potentially could be accretive to us as well. So we don't necessarily solely depend on Treasury application. We are looking at how to grow this business. And again, Charles, the reason why we differentiate too is because we have a team that is very operational, right? Kyle has run a merchant bank in his past as well. Before this, that's all I was doing, right, is operational work. I come from operational background in private equity and project finance. So yes, we do benefit in the bull market, but the underlying strategy is to build a real income generating tokenized firm or that participates in tokenization or a stablecoin market. Yeah. And it keeps compounding even in bear markets, right?
Yeah, no, this is good. I think one thing too, I was just talking to Matt Schultz at CleanSpark, and what's interesting now is the miners originally were unloved, and now we're seeing that companies that have a ways to be accretive to the ecosystem without just debt plays are actually the ones that it's now turning the narrative that they can produce more underlying asset or Bitcoin in unique ways that are more accretive to the investors in comparison to dilution and ATMing, which, we all saw MSTR absolutely rocket. They did amazing by doing these strategies. So hearing you talk about that, I think is something that's heartwarming for a shareholder, that it's not going to just be debt strategies, even though they're still great, but secondarily looking for accretive ways to add value to the ecosystem and the underlying assets. So I know you guys please. Yeah.
And just one more thing, because again, I think it's important for the audience, particularly the shareholders or people that own our stock. And if you are in crypto, or if you're looking at digital, if you're looking at blockchain or digital assets in general, you probably believe this is long-term. This is not just a trade in and out, right? I've been, I came into the space, as I always say, because of Bitcoin, but I'm staying in the space because of Bitcoin and because of productive asset like Ethereum. And so, because I know that the future will be built with these smart contracts. So if you are anybody that has invested in us, or they're thinking about investing, or you're thinking about investing digital assets in general, and you're looking at this, you cannot be looking at this in and out of trade. I mean, we these are powerful vehicles that have an opportunity to build really big businesses for the on-chain economy.
Yeah, that's awesome. Yeah, thank you guys so much for your time today. I genuinely appreciate it. And we'll have FGNX on again, guys, and have them back to the show. Joe, thank you so much for your time. Maya, thank you guys so much for your time. And we will see you guys around. Thank you guys for tuning in.
Thank you, Charles.
All right, we got 60 seconds. Maya, thank you so much.
Yeah, of course. That was fun, by the way, Joe. I love this. Is what I've been saying. Like, we need to do more of these together.
Yeah, I don't disagree.
Yeah, we have to do more of that. Okay, I'm going to come off, and then you guys do your thing, okay?
All right.
Yes, ma'am.
Thank you, Charles. Thanks.
Yep.
Bye.